Good morning. This is Dylan Jovine with Behind the Markets. Happy Monday. Today is Monday, February 23rd. Wow, this is the last full week of the month. These short months are, always a challenge. So I wasn't able to get into the office Friday because the construction still happening around here, making a lot of noise and lots of smells and all the things. But I did want to thank everyone who joined us on our webinar on Thursday. It was a great success. And the best part about it was you guys are so plugged into the AI fuel story, whether it's gas, power plants, nuclear, geothermal. We heard so many great questions from you, and I'm grateful for that. And we've added a surprise new pick to that. So if you haven't gotten that special report, I encourage you to do so. It's a company that actually makes picks and shovels basically for the nuclear industry. So their business is doing well. They're in a dominant position. Great company, great story. Today, I'd like to talk about JP Morgan out with a note saying, golden era for gold? Is it a golden era for gold? And in their note, they talk about really 6,300 in their intermediate term, and Bank of America and other firms have come out with raising their prices on gold. 6,300, 7,000, I've even seen as high as 8,000 from some credible folks. And what is really driving the price of gold? Here are a bunch of things driving the price of gold, but all commodity prices, like all prices in general, are driven by supply and demand, obviously. Demand for gold is actually driven by three things, and it's been very, very stable over many, many years. And that really sets it apart from other commodities, generally speaking. And there are three main sources that drive demand for gold. And I have some numbers here. First is industrial, investment, and reserve management. When you think about it, believe it or not, jewelry consumption accounts for about 50% of total annual consumption of gold. And demand is particularly strong in Asia. As they get richer, their societies, gold and jewelry is a way to show off to people's peers that they have gotten richer, that they've made money. So this is a universal human truth. Back in the Stone Age, when people start making money, they like flashing some jewelry. And we see a lot of strength in India and China particularly. So 50% goes to jewelry. 10% is industrial and technology uses. When you think of dentistry, electronics, aerospace even, so 10% of the gold demand is there. The rest of it is really investment and reserve management. And this has been really the significant driver of gold increases. And I'm going to tell you something. I think it's going to stay. I think it's going to keep getting higher. And the reason is you have to think of the change, really. Let's look back. If you track the rise of gold, it charts a couple things. It charts U.S. debt. It tracks that. It also tracks a strategic blunder the Biden administration made in 2022, which was the main focus of our Death of the Dollar report in 2022, where we recommended gold. So in 2000, central banks have doubled their gold allocations since the year 2000. In 2000, central banks held 22.1% of all gold. In 2019, they were at 29.4% of gold, so up 7 percentage points. But in 2025, that has jumped to 46.5%. So central bank, more importantly, so look, in 2000, central bank held 22.1% of gold. In 2025, it's now 46.5%. Central bank demand has really doubled since 2000. And central bank holdings has doubled since 2000, and demand for it has doubled since 2022 after Biden froze Russia's reserves in US dollars. Basically, Russia invades Ukraine, Biden administration freezes Russian reserves, and what happens at that point? China, who is trying to chip away at dollar dominance, starts going around from every country, trying to get them to trade in yuan, their currency, saying, look, you can't trust the U.S. If they don't do something you like, they're going to freeze all your money. So why don't you do business with us? And that's when you started seeing the petrodollar agreement quietly fell apart. They started pricing oil in yuan. That's when you started seeing basically all these other countries start to trade with China, start to walk away. That's when you started to see all these other countries start to move away from the US dollar as a reserve currency. It's still huge, but also start to pivot central bank buying into gold as a hedge against dollar dominance and central bank currency reserves. Think about it. In 2021, they were buying an average of 400 metric tons a year. But in 2022, and since then, that has doubled to an average of 800 to 1,100 metric tons a year. So you see this catastrophic mistake the Biden administration, I'm not trying to be political. I don't care. I don't care if Trump made it, Biden made it. It was a strategic blunder, in my view, that'll go down in history as the kind of blunder that gives an adversary a big opening. It's the kind of mistake you can make before China rises. It's the kind of mistake you could make when we ran things, where we had that unipolar moment after the fall of the Berlin Wall from the 90s, we'll call it to the 2010s. It's not the kind of mistake you could make now, where you have an adversary who wants to chip away, and every time you make a mistake, an unforced error, they're actually pushing their advantage. So you have seen banks really trying to hedge from US dollar risk, from policy risk in America, both like Biden's and Trump's constant explosion of debt. You've seen banks start to hedge in gold. I think that trend certainly is here to stay for now, until we see some fiscal discipline and some policy certainty from both administrations. Enough blame to go around. I'm not picking on Biden, not picking on Trump. Enough blame to go around. Plenty of blame to go around. Anyway, that's all I have today. Have a wonderful day. I'll see you tomorrow.